We just have a quick question here from Chirayu asking whether quarter-end rebalancing has more influence in the market compared to something like month-end rebalancing. So thanks for the question. I think the answer is that it will depend on the type of moves we had across asset classes during that particular month or during that particular quarter. So as you know, the whole idea around rebalancing is based on the assumption that portfolio managers and hedge funds and pension funds and fund managers, etc., have specific target ratios or have a specific allocation mix of assets, if you will. And rebalancing is when these players look to rebalance their portfolios to bring it back to their preferred allocation ratios if there has been some outside moves over a specific time period, like a month or a quarter. So remember that some of these players don't have a trading account of $100,000 or 10 million even. Some of these guys work with massive accounts of hundreds of millions and even billions, which means that they can't really get in and out of trades like we do. It will sometimes take these guys a couple of weeks or days to build into a specific trade or specific allocation. So the whole assumption is that some of your holdings might outgrow others during a specific time horizon. So, these players would look to the month end and the quarter end or even year end to try and bring their portfolio allocations back to their specific target. So, that they don't want to be overexposed on any particular asset class. So a good example is the traditional bond and stock portfolio, which is known as the classic 40-60 investment strategy. Now, imagine that in a particular month, your equity portfolio had such a massive jump that it now makes up about 70% of your portfolio instead of your target of 60%. So the assumption is that you would then rebalance that portfolio by selling equities or buying bonds or both to try and get back to that target ratio of 40-60. Now, there's a couple of ways that you can look to achieve that rebalancing, whether it's buying the asset that has become overweight due to its performance and buying the underweight one, or just simply buying more of the underweight asset class or just reallocating new funds that comes in to fill up the gap, so to speak, between those asset classes. So whether it's currencies or equities, fixed income or commodities, the deciding factor for rebalancing will come down to how much those particular asset classes or those particular allocations have moved over the course of a month and over the course of a quarter. If there's been massive outperformance, in one of them, then there's probably going to be some rebalancing. So in this recent example we have right now in September 2020, we just had a very big sell-off in equities for the majority of the month, which has seen some month-end rebalancing models expecting equity inflows and bond outflows, and similarly expecting US dollar buying at month end. So in this recent example, I would think, without having knowledge of how these models are built, I would think that the last month's movements would be more important from a rebalancing point of view compared to the last quarter. But again, it would largely depend on how the recent moves have affected portfolio underweight and overweightings in terms of asset allocation. So I hope that helps with your question. Any other ones, please don't hesitate to let us know.